Hey, hi friends, welcome to my channel Dr. Stock. I hope you have watched my series part 1 and 2 on the basics of stock market. If you have not, I would highly advise you to go and check those videos out. In this part, we will talk on the process of IPO. IPO is initial public offering, and I will start with a small story of why companies need an IPO, what is an IPO, and then I will explain a little bit on the what are the options the companies have, how it is done, what are the steps involved, and quickly we will understand is it really good thing to invest in an IPO when it happens. So let's start. So I will start with a very small story of Ather. So Ather Energy is a startup in India that started in 2013-2014, and what happened was that they wanted to get into the electric vehicle scooter. Now, if you see EV market, electric vehicle market in India, is it in a very nascent stage right now in the market? So what happened was when in 2013-2014, when two IIT Madras graduates decided that they wanted to go and start this business, they went with couple of investors to ask for money. So that was is termed as a seed funding or the promoter shareholding of that group, and they got some funding to start the process and they started working on it. Then. Once those funds got exhausted, having more rounds of fundings, so this is known as you start diluting your company to have more investors on board. So once they have a first prototype of this scooter ready, they went ahead with the series B round, where the hero led the round, and gave them the investments with I think 25% of the share. Now what happened was when they exhausted that amount also in making the prototype, in having the people on board, and spending that money to actually make a working prototype or to launch the vehicle in market, when that money also got exhausted, they went ahead with series C round, where they again went back to the promoters group and took some loans, have more people on board, where they did series C funding. And then there was a C2 funding also, get a line of credit from the Hero Motocorp to extend their manufacturing business. Now this is how startup evolves. I recently read about a news article where the Ather Energy's MD and CEO is looking to get more shareholders on board, or maybe they wanted to have more investment. So let's look at what are the options they have. They can either go with Series D, then they can either raise for more debt from banks or float a bond, or they can file for an IPO, or it will be a mix of all above, looking at how much investment they are looking for. Let's say Ather decides in 2020 that they wanted to go for an IPO. So how this process looks like and what happens in this. So I hope by now you have understood that IPO is a way of raising money from the market. So companies have decided to file an IPO. Let's say Ather decided to file an IPO. So what is an IPO? So IPO is an initial public offering in which the company will go to public and say, hey, we need to raise some money, and we are doing a pretty good business and we want your help to expand our businesses, and that's why we wanted to raise capital. So IPO is an instrument used by companies to raise capital from the general public. Till now, in all the series of fundings that you have seen here, there were some particular investors or investor group that were funding the particular startup. But now the company has decided to go to the general public to say that, hey, we need your help, we need your money to sustain or to grow further. But why do companies go to public? Maybe to fund the capital requirement that they have, to avoid debt, and largely to cater the risk to the public. But what are the advantages of an IPO? Then I would say that it provides an exit for the promoters, investor, or angel funding organizations. Now, if you see here, the Series A, Series B funding was provided by many prominent companies. Now, if they wanted to exit the organization, they can actually use an IPO by selling their shares to the general public, or maybe it will help the employees stocks of the company that were given to them as an ESOPs while signing for the company. And then third one is to have a positive growth impact for a public traded company. Now, how an IPO is calculated? So let's say you have a company who wants to raise 1,000 crores and has a total share of 200 crores with a face value of rupees 10. Now, assume this in the case of Ather, let's say the company wants to raise another 1,000 crores and they have already raised some amount of money, let's say 500 crores from the current investors, and they have issued the share to them, so giving it a valuation of 2,000 crores. Now, ideally, if you ask me, I would say that yes, the company should give away 50% of its, that is 1,000 crores, that is they should be releasing 1,000 crores of shares of face values of rupees 10 to public. But wait, this doesn't happen. And you know why? Because of the merchant bankers. Now, what happens is that, let's say Ather is doing really well. They are making some good amount of profits. They have a valuation of 2,000 crores. And there is a very positive environment that's saying that Ather is going public. That means people are very excited about it. They are saying that this is a really good business. This is a very high future growth business and we should invest into this market. So because of that, what happens is merchant bankers convince people that that 10 rupees face value is not the right price at which the people will be buying the stock. It could be higher, it could be 100 rupees, it could be 200 rupees, it could be 1000 rupees also. So what does merchant bankers do is that merchant bankers help companies to go public so that they can have a successful IPO, and they also help to decide on the price band of that stock along with that function. So, if you remember in chapter 2, I told you that I will explain you more about the merchant bankers. So, what a merchant banker do is they help to comply with the legal compliances and underwrite shares. Basically, they agrees to buy or sell IPO shares and resells the same to the public. So, what does an IPO share does is they buy those stocks from the company and then sells that into the market, and with a pre condition that those values will be given to the kind of investor taking their own cut, and the company arrives at a price band for the IPO. They also help to market the IPO by heavy promotions and appointing other intermediaries, namely registrars, bankers, and advertisement agencies, etc. So let's see how the IPO sequence works. So IPO sequence. So first of all, whenever a company decides that they wanted to go for an IPO, let's say in the case of Ather decides they wanted to go for an IPO. So first they will invest. They will appoint a merchant banker. Now this merchant banker has to work with the company so that all the compliances are followed as per the SEBI guidelines. Then once these guidelines are formed and taken care by the merchant banker for Ather Energy, then they will apply to SEBI that Ather Energy wants it to go public. They wanted to have an IPO. Now, with that, once SEBI receives and they have a back and forth with all the rules and regulations that they have to comply with, once the SEBI agrees with all the rules that the merchant bankers has agreed to, then they release the DRHP. Now, what is a DRHP? So I would say that you can assume it's like an annual report of the company which contains all the useful information like size of an IPO, number of shares that will allocate, how they will utilize the funds, what is the business model, and other financial information. Now what happens is once the DRHP is provided, that means it is available in the market. Now comes the marketing portion of it. So all these merchant bankers, because they are actually helping the company to go public, and the higher the price at which they will close the IPO, more fee from the company itself. So they do a lot of marketing for that IPO. They discuss with a lot of financial intermediaries to fix a price band. So let's say for Ather, they decided that okay, even for a face value of rupees 10, they wanted to have in a price range of 95 to 105 rupees. So each stock, which is a current value of 10 rupees, will be in the range of 95 to 105. So once this price range is fixed, then the book building process starts. So this is an official window that is opened by the merchant banker for the public, where they can subscribe to these shares. Merchant banker will go to public and say that hey, if you really wanted to invest in Ather Energy and wanted to invest in IPO, and so you go and share, at what price will you buy this IPO between the range of 95 to 105? One particular individual who subscribed to that IPO. So it is like out of this pool of 1000 crores. Now let's say the range has been decided. Let's say in rupees 100, they will be giving 10 crores shares. So they say that, let's say instead of giving 100 crores, we will give only 10 crores shares out to the public with a 5% of the of the company shares. Then we will go to the closure of IPO. So once people have invested, once people have said that this is a fair price for the IPO, and each individual will get only a certain number of shares for that IPO, and then the process of collecting all these price points begins, and then a final price is decided, which is known as the closure of an IPO. This is where the IPO, this is where the shares are given to the people who have applied for that IPO, and then in the last step, the company is listed on the stock exchange with those people having the number of shares from that IPO. So there are some of the jargons that are very commonly used in IPO. So one is known as under subscription. So this is during the book building process. Let's say if the company is saying that we will subscribe to 10 crores of shares, but they received bid for only 8 crore shares. That means it is undersubscribed. That is, there are not many people who wanted to have this company. This is a really bad thing. That's why this is known as undersubscribed. Now, what is an oversubscription? If the number of bids received are higher than offered, that means if the Ather wanted to release only 10 crores of shares, but they received a request for, let's say, 12 crores of shares or 15 crores of shares, then it is known as oversubscription of the IPO. Now, what is a green show option? Now, what happens is in the event of oversubscription, let's say what happened was Ather wanted to give out only 10 crores of share, and it got oversubscribed. It got, let's say, 15 crores of shares request that people wanted to comply with. So a merchant banker and company who is going public can discuss among themselves to have a typically 15% more shares to be given out, so that oversubscription can be used. So this is generally good for a company, so that so that it gives a really positive signal that a lot of people are interested into green shoe option. Now, what is a fixed price IPO? Fixed price IPO is that there is no range or there is no band for the price, and the stocks have to be purchased at a fixed price of IPO. That means instead of 95 to 105, you have to buy, let's say, 100. So that is known as fixed price IPO. Now, what is a price band? So as I mentioned, price band is the band which is generally given out by the merchant bankers, stating about the health of a business, in which range it belongs to. And then the last one is a cutoff price. So this is a price at which finally the price decided for the IPO. Now, cutoff price is generally, let's say, in our example, from 95 to 105 price range. Let's say cutoff price could be rupees 100. Now, I will give you one example of IPO that I was really closely following and decided not to invest. That was on the SBI card. So there were a lot of articles, a lot of advertisement, a lot of marketing done by merchant banker of SBI card, stating that it's a really good thing, you should invest into this market and things like that. But what happened was when the IPO was floated, that time it was, I think, started at 715 rupees or 700 rupees, around that, and then it started falling. Now it could be because of end COVID, or it could be a lot of reasons, but my experience have said that a lot of IPOs are overhyped, because they are generally put in the bull market whenever the markets are going up, and when the markets are going up, you tend to assume that the company will do great without thinking that it could lead to losses also. So I would say that generally I've seen that, from my experience, that IPOs are overpriced. They're generally offered in the bull market, so you should never speculate in IPO. You should actually do fundamental analysis for that stock before you even think of investing in an IPO. Or I would say you stay away from IPO if it's a really uh, good stock. Then you will get a lot of chances to buy that at the right time. So this was on the IPO. I hope you understood the IPO process and what is the major role played by merchant bankers. So in our example, if you'll see, merchant banker actually saved 50% of the company and dropped down to only 5%. That is a role of merchant banker, and it plays a really big role in any IPO. So I would say my two cents are that you should always remain away from an IPO. Thank you for watching.